This guy just made $10,000 in 10 minutes.
What they are doing is that these buyers are trying to protect it. Done. We took another 2,000 out of the market. We took another 3,600. Bam. 24,300 for the session. We are done in 20 minutes. I trade million account. It's my personal account. You cannot do $25,000 session getting a small risk on a 100,000 account. It's impossible. What you see here is not only because of the volume and the platform, because we need to be honest in this. It's
the world's best scalper, one and only Fabio Valentini.
If the market today wants to give me 30,000, I take 30,000. If the market is continuing to action, I can continue to trade and build, but holding one trade for all the movement is something that I was doing before and I was less consistent.
For the first time in the industry, I sit down and do a live podcast whilst the trader trades live the New York session.
On Monday, we did $10,000. Yesterday, we closed New York at 28,000. And today we are sitting at 11,000. So we will try to close a 6 figures week.
I ask key questions about his process, how he handles drawdown, key trading decisions in real time.
You cannot have 1 to 20 risk to reward with 75%. If you have, call me because you are some billionaire.
In this 2-hour session, you will see a deep dive into an elite trading mind. Number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Welcome everyone back to the Words of Wisdom podcast, the number one trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. Talking which today, we're in Dubai and we're doing something a bit different today. Today we're going to have live trading, which you know already who that must be. This trader was on Chart Fanatics and had an episode that did over 1 million views in just 3 weeks because he traded live the New York session. Not only that, he has another video that's already done 1.7 million, doing the exact same thing, trading live in front of you. And right now, before coming to today's episode and recording, he's already traded London session, where he's made over $10,000 just in London session alone. New York session has just begun. It's the one and only Fabio Valentini.
Thank you, Aris, for hosting and this lovely presentation.
Thank you.
Today we are going to do a breakdown of the New York session. Now, considering all the love that the community of Chart Fanatics showed to me, I'm going to share the London session that I did yesterday and today. It was an amazing session, really high win rate, amazing setup. And now we are ready to start. Today it's the 15th of October. I traded the London also today. We are sitting at 10,000 and almost $11,000 profit. I have to share with you my rules to trade the session. The drawdown, the maximum drawdown that I accept for the day is 10,000. So considering we are already in profit, the maximum that we can do is lose this 10,000, go back to break even and lose another 10,000. Because I'm not willing to go above this. The previous week, let me clarify for you, the previous days of the week, so Monday we did $10,000. Yesterday we closed New York at 28,000 and today we are sitting at 11,000. So we will try to close a 6 figures week.
Incredible.
And the New York session is getting ready. I can see already a little bit of absorption on the bottom. We are recording the screen so you don't have a shaky camera like I did with Andrea in the first video, but they loved it. They loved it.
Yeah.
So I'm going to give a breakdown and I will get closer to it so we can also see how the session is unfolding. So usually I wait for European time, the first 30 minutes of New York opening to have a little bit of stability in the session. Mm-hmm. But I can already see that the sellers are getting absorbed brutally. So I can expect this high to be taken and then to have a good session going up. I will scale in with small contract and that as we build profit, even if we are already 11,000 in profit, we are going to, so the first high is purged for the day. What I expect is to have a long session and I will explain you why. We are using the profile distribution of the first the first hours of the session. As you can see, we did an amazing reaction on the value area low. We were doing an introduction, otherwise this would have been a long.
Yeah.
And it's an amazing long. Now we expect a little bit of retracement and we can trigger our first long position here.
Incredible.
What you are seeing here, I change a little bit the template and I will explain you why. People that see me are used to see big trades, okay? It's the same template, just I make it hollow, so it's empty inside, so they can see better the candles. This is the only change that...
What time frame are we on? Because these candles are closing rapidly.
I made the 40 range now, so it's a range chart, because when you are in New York opening, if you do 1 minute candle, you can have huge candle and all the data inside gets aggregated. So I will show you how much is different 1 minute or 5 minutes. Let's do 5 minutes. I show you the one that we were using the other time. You see how much it's difficult to read. It's all clutter. But if you use either 1 minute or either, I like to use range during opening, you can see really clearly what's happening. Intraday gap, I'm afraid of tweet Trump again, because Friday was pretty difficult. And so we have in intra gap, it's really rare to see something like this. And we are trying to build our first position of the day. The first position that I'm considering, as I was saying to you, is going long from the bottom of the range, from here, going to target the value area high. So we have a lot of room of movement. Now, this gap is not really convenient for us to trade because we are trading against this huge pressure. I want to see some absorption here. How can we see absorption? As I explained to you, big trades, it means they are hitting a wall, that is this area that I created, and then going to capitalize with an asymmetrical risk to reward to go long. This is the setup that I explained in Chart Fanatic, that is going from the value area low in a momentum day to the value area high. And the setup is trying to unfold. They are trying to push down. As of now, they are having result. So I don't want to go against the flow. If they are managing to breach this level, I don't want to be inside. But I can already start to build my position up. What you see, it's interactive broker because it's directly connected. I can start to build buy stop. What does it mean? That if the market gets heavily absorbed here, I want to be covered below this low. Okay? So I'm going to build my position here. We are not going super aggressive on the size. And we check if these sellers are having a follow through. As of now, the sellers are really strong. They breach the level. Okay. So what I'm doing now is canceling the buy stop and going to consider another area. So this one is not valid. We took a stop loss? No. Why? Because we analyze exactly the interaction between the market participants. Now, this is the distribution. Let's make it including more data. As you can see here, there is a red level, okay? This one is the POC, so where the most volume got exchanged in the value area low. So basically, it's giving me the point of maximum interest for the accumulation that created this up movement. So this is the second area that I can consider. If this area gets broken, I don't want to be long for the day. So it will be really, with a big probability, a consolidation day. Let's check what they are doing. We can check also with the delta what they can expect, and we can start to build our long position. 1, 2, 3 contract, going for 4. We are going to cover ourselves below here. It's only $2,000 risk. We can take other position here, and we are going to try all the recovery of this movement for a profit of $7,000. Now, I didn't load at full size because I want to scale as we go up. I want to be right with the market, so I'm not to load everything while the market is collapsing.
Of course.
But what I can see clearly here is that they are starting to get heavily absorbed. So I have an area, and if we want to be more conservative, we can already cover our stop losses here. We have half the risk on the position. I'm going to load also position on the way high. So this one is too high. We can load other two, 1 and 2, and try to capitalize on the long. sellers super aggressive, but fortunately for us, they are being absorbed. We are risking 2,000. Okay, we are risking 2,000 to make a potential $10,000. Okay, so soon, guys, we will go risk free on this position. This is the AAA setup.
Yeah.
Why AAA setup? Value area low, so we are really low on the curve. The market participants are setting up because it's 30 minutes in the session, so it's not sellers trying to aggress, buyers trying to protect. Already they understood what they want to do, and we are building already the position for the day. Now, Ritz, I don't want to take risk because we are already in profit 11,000 for the day. In 1 minute, the position is risk-free. So we are risking 0 to make 10,000.
Mm-hmm.
This is simply a trade that is done low on the curve on absorption.
Mm-hmm.
If this level gets broken, we can consider another long position for the day. Let me clear everything that we have here because it's really confusionary with big trades. The point of risk that we have is the potential close of the gap.
Yes.
Because the sellers can try to protect again the gap.
Yeah.
So we can consider, we are already floating $5,000, we can consider to take some profit for the day. Let's see if we have a reaction. If we see buyers getting crazy aggressive on the upside, it's not worth it to take a position. But we will trail our stop loss as soon as we see buyers getting in the position. Let's check.
And just to clarify for everyone at home, this is live capital.
No, this is personal account. This is not
live capital. So he risked actually $2,000 of his own personal capital, currently floating $5,000 of his own personal capital in the space of a few minutes, which is incredible to see. And you could see, one thing we didn't, maybe do in the intro is if needed, Fabio won't speak and will focus, but he's done a really amazing job of really just running through exactly what's happening minute after minute, candle by candle, movement after movement, which I didn't expect personally. I thought we would give pauses for Fabio to focus. So that's incredible, level of skill set to be able to consistently, break down exactly what's going on as it's happening while managing, entering and executing.
I took
trades.
5,000 out, not still, but stopping profit, okay? Because I don't want that we are going to hold the gap and to give back the market. We are floating 7,000. Just is not wise to, we position ourselves here, guys. Yeah, $0 drawdown.
Well, I've heard you talk about it before, right? It's not worth you risking 5,000 to make 5,000, right?
Totally not worth. Consider that even now we risk 2,000 to make 8, so we are already risk to reward 4. Mm-hmm. If we get this take profit, it's a 5R for the day. Considering that also in the New York, in the London session, I took 5R, it's 10R for the day. It's an amazing session. And let me be honest with you, it's not that we shoot 10 sessions with it and we are choosing the best one. We are doing this live. Okay?
I wish I was allowed to spend that much time with you.
So we are just evaluating now the auction of the buyers. It's crazy aggressive. And even without big trades, I can see how much they are protecting. I want to be covered here. We are going to take out 6,000 if it goes bad. Mm-hmm. But as you can see, this is the first level where the buyers are struggling. Yeah. And when we are having a reaction sell, so I will be really tight with my stop loss because every tick down that it takes is like $500 that I give back to the market. Yeah. We can expect a squeeze if we get this high and we will go directly to take profit. So as soon as they touch this level, all these sellers are trying to push down, being absorbed. So if we manage to reach 24,987, I can consider already a take profit because I can expect an expansion up. Let's see how they do.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, Alpha Prime, the first of its kind in the industry. Now, evaluation firms have been in the industry for the last few years and done absolutely phenomenal in terms of its impact for traders. As you can see here, through Alpha Capital and Futures, so many payouts to so many traders across the world. But now, for the first time, there is an incredible route for traders to become professionals and to trade live capital, and that's through Alpha Prime. So let me quickly tell you how it works. You could just buy a challenge on Alpha Capital or Alpha Futures. Doesn't matter which one. So Alpha Capital, you have phase 1, phase 2, phase 3 challenges. On Alpha Futures, you have standard and advanced plans. Whichever one, purchase a challenge. Show consistency, build your track record, and then you can be invited to Alpha Prime. Alpha Prime, you will get access to live capital. You will get access to risk management and resources at a professional level. You will have a salary as a trader and access to trade on live trading floors starting here in London. This is the first of its kind, where an evaluation firm is finding talented traders and then backing them with live capital and creating a route to professional trading. I am very proud to be sponsored by Alpha Prime. The links for both will be in the description below. Alpha Capital and Alpha Futures, use the code RIZ for 20% off all challenges. Link is in the description below. Now let's get back to the episode.
As I told you, I traced the horizontal level as the first level of dominion of the sellers, and this is exactly what's happening. How I did it, because I saw that this is the first time in all this movement where sellers are actually having a result. So it's not about volume, it's not about price. It's about who is winning the battle, okay?
Yeah.
I will take 6,700. As I told you, you will see an acceleration as soon as you reach this level, and you can see what? Aggressive buyers on the top. If the buyers are aggressive on the top, it means that they are willing to pay a higher price to get an asset.
Yeah.
So I can expect a continuation and squeeze. We can see a little bit of absorption here because it's a round number. We are almost at 25,000. It's a psychological level.
Yeah.
I'm not willing to give this money back to the market, so I'm going to cover below the gap, $8,000 in profit, and we see if they can. Already we are close to value area high. So here, okay, 10 minutes in the session, $11,000 of profit. I want to show you a little bit the trading stats of the week so you can understand how I manage the risk in this account.
So just to clarify, it's almost over $1,000 a minute that just took place there.
Yes. So this is my model, Nasdaq model account. I'm going to get from Monday, so we have all the week, it's 13 till today. We are going to generate, so we are in profit for the week 66,000 almost. This is the track record of the week, and I want to clarify something, like the maximum drawdown that we had is on profit, okay? As you can see, we are going to capitalize on the position and risking back our profit. Like if we want today, we can shoot for a $50,000 session. Just we need to understand if it's worth. And I want to show this. This is every single execution on losing trades and on profitable trades. What you can see is that all the losing trades are contained in 2,500. All the best trades are like 6,000, 10,000. One trade was 12,000. This is the only way to be profitable, like making sure that when you are wrong fast.
Yeah.
So, just to do a recap, we took the bottom of the day, we expand higher without a single drawdown. Probably the session is going to continue higher. For me, at the moment, there is no trade. This was the triple A setup. Let's see if we can have a breakdown and test trade.
Yeah.
So if they break the value area high. So as you can see in volume analysis, this one is constantly developing with new information. Now we have the up part that is so small because the buy pressure is crazy. What they are trying to do is they are trying to recover the squeeze that Trump did with the tweet, okay? So in this session, what I'm going to use is a momentum model. So if we can break this high, we will see exactly the same that we saw in all our session. So I want to take a small risk here with a buy stop. Why? Because my stop loss will be really tight rates. I can do 4 contract here, and I have an amazing level to cover myself behind. That is this level of aggressive sellers.
Yeah.
So they are protecting the level like crazy. I can have a really small stop loss here. And I can capitalize on the squeeze. Now, the only risk of the squeeze is the filling level. I can be filled at a level that is not so amazing as someone can expect, because the market just does
Yeah.
what we did in all our funny, okay? And I need already to prepare my stop loss because it will be so fast that it can give me an absorption. Okay, we are covered. We are only risking 1,500. We are betting here on the squeeze, guys. We are betting on the squeeze. We are low sides. We are trying to make 3,000, risking 1,560. And as soon as we go high, trail stop loss and get back inside. Why? Because this level is creating a liquidation. There is a big probability that this level will create a liquidation. Now we are getting to the protection level. Why the protection level? You see the area.
Yep.
Buyers stepping in. Sellers are getting annihilated on this level, absorbed. These are aggressive buyers. What does it mean? That if we reach these aggressive buyers, these sellers will need to close. If sellers needs to close, we have an expansion higher. Okay? So this is the momentum setup.
Yeah.
I'm betting on a long session and I'm fast in covering myself if I'm right in the position.
Yeah.
Okay? So now, guys, if we manage to get high, I need to be really fast at covering and adding contract because I want to be in the wave.
Yeah.
Okay? Fast. Okay, we cover. Our stop loss is only 1,200. We are going to put it to zero really fast. Okay? Huge auction higher. Where can we cover ourselves? Below the aggressive sellers. Okay? Now I want to see a big wave up. If the movement is starting, okay, I cover myself here. I'm risking $20 to make 3,000. If the auction fail,
Yeah.
I don't want to be in because it means that the buyers are not strong. What happened here? Sellers to back control. I can try another time here with a small stop loss. Also here. Let's see if we get filled. Now, what I was trying to explain before is how much chart can become cluttered when it's New York session, okay?
Yeah.
See how much is dirty.
Yes.
In minutes is really difficult. I prefer to watch 1 minute. But it's really, again, we are risking 2,000. We are not risking back the profit, not even the profit of New York we are risking. We are really low on the risk side. We want to make 6,000 on this one. Sellers trying to get aggressive, getting absorbed. So what I can do, load other contracts on the potential squeeze up,
Yeah.
putting all my risk here, still risking 2,000, but now the potential is to make 7, 8, 10,000.
Yes.
This is dynamic risk management.
But you can see the aggressiveness of the management as well.
It's like this part, there is no indicator that can help you. This is just daily practice on managing position, session by session. And it's really difficult, guys, to explain this while I do because the mental process is lower than the execution. So I'm trying to do the best. So in this case, we give back to the market a total of 2,500 on our profit because the auction is low. You can see the auction is really slow in this side. We can try only the limit because you see that they are pushing with aggression on the top. This is the last trade for the day because if the auction is failing, they are getting back in the range.
Yep.
I don't want to be inside. Okay. So what I will do here is wait for these big buyers to get supported. Auction going back up, covering myself below the low. One stop loss. First position is filled. We can also try to get some limit here. 4. And the last one. So we trail the risk here. And we are trying to shoot for 5,000, 7,000, also $8,000. But we want to be fast in how much risk we input in the market. I want to be fast at putting risk to zero because this is the most important part. Auction is really slow. guys, this is a really slow session for the day. And this is probably because the liquidity got dry after all this move up that we monetize. So they are accumulating as they go up. Let's see if we can.
If we weren't in the studio right now, would you have walked away after the 10,000, or you would still be looking?
No, I would walk away because already 20,000 for the session. I took a triple A. Just I want to make them participate in all the auction, but this is not healthy for my accounts. It's just I want to explain them as much as I can, showing all the setup, but this is not how I trade when I'm like if I get the 20,000 profit for the day, my rules say it's done, because probably you will have consolidation after a strong move. We took the best move of the London and of the New York, we walk away. This is how it's managed usually. But, you know, we are on the channel, people want to see, so let's do it.
I appreciate that. That's why I wanted to ask, though, to just see what the reality would have been.
Yeah.
But it's good to hear.
So this position is not what I like. I'm going to take profit on this one. Why? Because the auction failed.
I was going to say, yeah, what were your thoughts about this?
So we are back in profit at 9,000 for the session. I will try to build on the way up here, 1 and 2 here. Cover myself here for only 1,600 risk. I remove this one because it's the old take profit. If these sellers get absorbed, is another momentum AAA setup, so we can play again.
Okay,
we can play. Putting all our risk here. Ooh. Okay. Let's shoot for 5,000, all risking $800. It's an amazing trade, this one. We are covered below aggressive sellers' failure.
Yeah.
So we are capitalizing on other trades' failure. This is the model. I'm going to take profit as soon as the market goes up because I want to close at 2,000. So I'm going to bring, no, this one is too low. Let's trade. Now the auction is going. Now they are starting to auction higher.
Yeah.
All these big trades are protecting us. I expect another expansion up.
And what was your settings in terms of to show as a bubble on the chart? What was the minimum contracts again?
Almost the same. It's 30 contracts. If you are in London, I use 20, but I record that for the community, everything. They have a full masterclass of 1 day with me for free. So now we are floating again 3,000. I will take a little bit of profit if we break the high, because now I start to see that sellers try to protect the top. You see, they are developing a sell candle in the situation of dominion of buyers. So probably we will go back here, and if we go back here, I give back 3,000 to the market. Is not really convenient for me.
Yeah.
But if we break this high, another squeeze will happen. So what they are doing is that these buyers are trying to protect it. Done.
Yeah.
We took another 2,000 out of the market. Oh, amazing. We took another 3,600. Bam. 24,300 for the session. We are done in 20 minutes. But guys, no. You know, I like always to be humble, but we took the bottom. Till the value area high. When the buyers took control, we took some stop loss, and I wanted to show how the stop loss are small related to the profit that you can make. And then we took all the expansion higher. I don't think it's smart to continue trading, because after a wave like this, zero retracement, the market will just go sideways. And when it goes sideways, it's expensive for me to trade, because every trade that I open, I pay commission. And on futures are not too small in interactive brokers. So just let's do a recap of what happened. The other time on Chart Fanatic, we exactly went through all the models. So value area, high, break, test, these trades. Value area low, accumulation phase. Model 1. Model 2, momentum trades. So we managed to take in New York session all the execution that I explained in the model. And there is someone in the comments that I saw, Fabio, you are gatekeeping something. Guys, I don't have another screen. I don't have a phone. You think I will risk $25,000 in one session just to pretend that I use a model? No, just this is my personal model, and I decided to share for free on this channel. And the result of the views are amazing. And I think we will just, guys, try to squeeze up again on the tweet of Trump, because we are almost reaching this level.
Yeah.
And I want to show you the perspective on the 5 minutes, because all the people are used to trade on the minute chart.
Yeah.
It doesn't change anything, okay? What I want to show you, what happened? Huge aggression on the value area low.
Yeah.
Full of sellers. Huge aggression of buyers with result. If you are not using order flow with price action, you could have taken this trade here. How much is your risk to reward? 1-1. How much we did? 10R.
Yeah.
It's really different, okay? So the reason, because people say it also in the comments, is better price action. It's not a battle. I use price action. But price action is the impact and the result. Order flow is exactly what's driving the price.
Yeah.
Okay. The other information that you can get if you want to make a masterclass that is worth $20,000, it's options. Zero DTE options nowadays is so important. I didn't use option now, but you can use options to get a sentiment for the pressure.
Okay.
Okay. Options today were completely long. I only watched this at the beginning of the New York session. So just I decided to flow. Which platform you can use? There are a lot of free platform, but there are also paid platform on the option side. For me, it's not worth to pay $300, $400, $500 per month just to know the option pressure. But you can get, I can share with you some links where they can just see if the option are pushing high or low, the pressure, a gauge for pressure. So what we did now is that you can see here, we are completely in an expansion day. The only trade that we can take is the mitigation and the test of the value area high. Considering this huge aggression for the day, I don't think we will reach this level. I think we are going to shoot for the Trump tweet high to squeeze another high. And then I don't know, maybe Baron Trump can try another shot for 200 million. But unfortunately, we don't have insider position.
And it doesn't seem like you need it, to be honest with you. But just to clarify as well, when we're referencing this Trump tweet, on Friday the 10th, Trump made a tweet out of nowhere in regards to tariffs on China. Cryptocurrency absolutely melted. NQ and everything really sold off aggressively. And then on the weekend, he tweeted, oh, actually, no, it's all as well.
China president is so good.
Yeah.
My dear friend.
So volatility has been increased. Fabio was saying just before we started how, this week's been a bit crazy in terms of trading for him.
Really difficult to trade this one because, as you can see, you get sharp moves. You get really hard expansion, really hard control. Usually, the market condition, like this is the tweet, okay?
Yeah.
The market condition that I'm used to trade is this one. Like you build, you accumulate, you expand, I take the breakout trade and the value area low. This one is not a breakout trade. It's a collapse of the universe, okay? And what they did today is that they are just targeting this high. And even my pre-trade model was that today we will push and squeeze this high. We will try to reach at least this level also. Market maker don't like this kind of environment. Okay?
Of course, yeah.
Like this kind of tweet is the reason market makers can lose the profit of the month, because liquidity completely disappear because they don't want to input risk here. So the price melt. So be really careful with days like this, specifically if you are leveraged on crypto, because you can get slippage, you can get not filled at the level that you want. If you are doing CFD, the risk is way higher because it's on the broker when he want to close you. But be really careful out there. This market condition is not easy to trade. Just what I'm trying to share is that professional tools are out there. If hedge fund and institution use order flow, there is a reason. You are watching exactly what is driving price with fundamentals. So it's not some kind of furu guru stuff that is providing you with a ready-made model. And also, One dear friend of mine told me, look, you are going to do live session. You are going to show people that it's possible to make 5-figure sessions, 6-figure weeks, but you are not clarifying the capital that you're putting in the market, the total account. So I want to be really clear on this. I trade million accounts. It's my personal account. You cannot do $25,000 session getting a small risk on a 100,000 account. It's impossible. And I want also to clarify that what you see here is not only because of the volume and the platform, because we need to be honest in this. It's years and years of reading that brings you to this level. Don't expect that you start to use order flow and you get results like this, because it's not a magic tool. It's not something that is alone sufficient to make you profitable.
Yes. That level of experience and the reps that you have to put in is what develops to what you're showcasing today, as well as obviously capital size that you're trading with. But, you know, if someone puts in those reps, the whole purpose really is to highlight what is possible when you've done that deep level work, when you are able to decipher the information that order flow does provide you, in conjunction with, as you've already marked out, you know, just understanding significant highs or liquidity. You know, you use this in conjunction together is what then creates such a result. I think people are blown away by the accuracy, of course, the confidence of execution that you have. But I love the fact that you always highlight the years and years of effort and time and sacrifice that has to go in to make it actually possible. One question I do have in terms of, I'm sure people are asking, maybe you're thinking this, like you've marked out these potential areas that price could go to.
Yes.
Why not just hold your trade? Why not? I know obviously you're a scalper, but why not hold your trade and get this potential bigger target?
I did a lot of research on this, okay? So what I notice is that you can shoot for high risk to reward, but if you shoot for high risk to reward, you will be completely destroyed in contraction day, okay? I prefer, look, I can show you because it's really important for people to understand my complete model, okay? So on the account, I want to take only from Monday, I took like 100 execution, like total of 100 execution. I want to show you the average winning trade, okay? So the average winning trade is $1,000 on one contract, okay?
Got you.
One contract. Now I load 10, 15, 20. The average losing trade is 600. If I try to shoot to get the maximum high, my win rate will get lower. I already don't have a huge win rate. I have 43 to 49%, okay? But my win rate is based on average and maximum winning trades is $10,000 per contract. The max losing is 3,200. If I want these numbers to go up and hold, these numbers will go down. It's a balance, okay? So what I prefer is to have consistent 10,000, 7,000, 10,000 days instead of having small days like -5, -6, -7, +60, okay? Because if you try to shoot here and you ulti here, today you will have maybe 50,000, 60,000 day. But yesterday in the London, I would have -5 and yesterday I had +10. Okay. So it's always to which kind of approach. You can be a sniper and shoot for the high, but your skill is not sufficient because if there is enough pressure, you will never reach this level. Okay. Maybe now we go down. Imagine floating 60,000 in one session and seeing break even. It's a trading approach that I understand. It's more relaxed, but I don't like it because I like to read the market in live as it develop, and if it's necessary, cut my trades. If the market today wants to give me 30,000, I take 30,000. If the market is continuing to action, I can continue to trade and build, but holding one trade for all the movement is something that I was doing before and I was less consistent. I know that it's counterintuitive, but if you think about this, getting from A to B and A to C, it's of course a huge number of different in ticks, okay? This probability in ticks is contained and distributed through days. Look at a day like this, okay? What I will do, I will get value area low and I will shoot for the close. completely zero. This one is a session that I made 28,000, okay? Completely zero. Look at this week, what I can expect. Down, we go to cover here. Bam, liquidated up. Oh, we are distributing down, value area high. I shoot down, but I don't want to close here, that is level mark. I want to close here. Bam. Like, I understand what you say, but this model of keeping and holding, it's only working in days of volatility. And you know that there is statistic of the market that 70% of the time the market is stationary.
Yeah.
Okay, I want to make money also when it's stationary.
Of course.
So I'm willing to sacrifice this extra 20,000 to have 70-80% of green days.
And it's also, something to take note of is, as you mentioned here, you might get stopped out, but you'd be right.
Yes.
Right. But then what's saying you're going to get the execution?
Imagine how much you bite your hands if you get a failed auction, liquidated here and see something. It's really frustrating because you were in profit of maybe 20,000. Now you are -5 for the day and also you are correct.
Yeah.
And then when you enter here, because it was so fast that to get this movement, like you needed to be sure really that the market will continue.
Yeah.
So what this is the approach that I'm having constantly. This is the account that I show on where I call it hyper scalping.
Yeah.
Because every new information of the market for me is a way to monetize it. Okay.
Exactly. Yeah.
So if we go down here, we can check. We took the absorption. Holding. Trapped buyers. I would have closed here. Okay. Yeah. I will never hold till here. Why? Because now, and what it's important for me is now the market is bunching on a wall. Okay. And I don't want to risk that this wall takes back 20,000. Like, let's put everything in frame. If we hold this trade till up, it was like 20,000 trade. Okay. I have my break even here and someone says, I'm already break even. I don't care. And no, it's not like this because you are willing to sacrifice 20,000 on the move down. I treat every trade not only from stop perspective, but from profit perspective. Okay. The only things I'm willing to do now, if it breaks, I load again, $2,000 profit, and I squeeze another 10,000 for the market. But I'm not giving back the 20,000 that I make. This one is creating.
So you'd rather build your cushion, build your profit, and then risk your profit only.
Risk your profit if there are the conditions till we don't go. For example,
so right now, there's only two trades you're saying, right?
Yeah.
One, if we break above and then retest, or we retest the zone.
Exactly. And also this trade here, there is one thing that is holding me to take it.
Okay.
Because we didn't close the structure. This is a movement and the market makers don't like.
Okay.
Because they are not willing to capitalize on this, and this movement create this imbalance. The nature of the market is to rebalance and expand. Okay. So this, for example, it's a model of chart fanatic that I gave. That is the test of the value area, maybe a little bit of absorb sellers, and then we have another trade. This one is a potential 30,000 additional trade for the day. Getting these trades means that you are betting on the fact that all this will not be rebalanced and that these aggressive buyers are willing to break this level. It doesn't seem to me a condition in the market where they can break, because look how much they tried. It's 20 minutes that they are trying. As soon as we exit the trade here, they stopped. Okay. Why we exit the trade and they didn't shoot high? Because I see them struggling. Okay. I give an example to the student on YouTube. It's like a boxing match. Okay. Will you ever bet on a winner after 4 rounds, after he's getting completely destroyed? I will never do this. Okay. Now the market is saying, look, in this condition, the winner won the first 2 rounds. Now the other one is punching back and they are almost the same. Okay. I don't want to place a bet. I want to place a bet if we win another round. Why? Because my probability gets higher. I know that it's counterintuitive because traders expect that the more activity you make, the more you hold, the more profit you made. I did extensive statistical research on this, and it's not like this. And you can understand this also with VWAP, standard deviation. Okay. The probability that you will get the maximum standard deviation is like 10%. So out of 10 sessions, 1 session reached the extreme level. Why you are willing to sacrifice the profit of all the 9 sessions? Build the profit. Then when the market is ready to give you, it will show you. For example, now the buyers are getting again aggressive. Okay. What we can do is try an expansion phase with our stop loss below here, risking maybe $2,000, okay? To make another 6,000 and closing 30,000.
Yeah.
This is a trade we can do, okay? But not when we are getting absorbed. Because when we are getting absorbed, like we are betting on the losing side.
Yes.
And I know that usually traders think in terms of set and forget, okay? They execute here and they say, my target is here, I go to eat pizza. I cannot do this. Why? Because I have had too much pain to see risk to reward 1 to 20, 1 to 30 going back to zero.
Yeah.
And when it's personal account and when you are giving back to the market 40, 50,000, trust me that you start to take partials.
Yeah.
Or you start to get it down. Then, of course, it's amazing when you see a trade getting the bottom of the day, getting to the top of the range. That is only 20% of the session, okay? For me, it's not worth it to trade like this, but it's totally a personal opinion. I have one of my dear friend, he trade only gold. He does low win rate, huge risk to reward, okay? This is another model that I can respect. It's not from my side because you have days of the calendar, red, 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 huge green, red, 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 huge green. I don't like it.
Yeah.
Okay. It's just personal opinion. It's like,
Exactly. Yeah. It's being able to handle the reality of the decision you make, right? So like even going back to what we were saying earlier, this trade, even if it was to play out and you know, fit the criteria, in reality though, if we weren't sat here, you wouldn't be on the charts now.
I wouldn't be.
Do you, when you finish, do you just close it and then walk away?
I close it. I close it. I can get back to the market. For example, for what it's doing now. Now I like it. Why? Pushing higher. What happened to these sellers?
Sellers just getting disrespected.
Okay. So now we have a potential squeeze here. This is the only trade that I can evaluate. Let's do another one for the community. Okay. I'm going to cover really low. How much are we risking? 800. Okay. Why? Because if these aggressive sellers are holding, we can get the squeeze at the top. Let's try to close this 30,000. Okay. If we are wrong, it's not convenient for us to continue trading. We can load one on the up because if it explodes, I'm immediately in profit and it's free. Okay. Consider it's only $800 risk. So we can take another trade if this one goes to stop, but I will not continue because as you can see, sellers are really good at protecting this level.
Yeah.
Okay. So now we are betting on the fact that this buyer protected and these sellers will not continue the movement. So we are, you see how many times they push,
They try.
absorb, push, absorb, aggressive buyers. What does it mean? They put the lock here. They say, no, bro, you don't go here. Okay. What are you trying to do? It's not the time. So now I start to like it and they want to be covered immediately. As soon as I'm right, we cover below this and it's done. Okay. Risking, look, not even if I do $2,080. Okay. Where are we trying to shoot for the extra 6,000? The session. This is not something to be tried at home. Because it's not one of the best setup, and we had the failed auction. What does it mean? Again, you see how much buyers they absorbed? Sellers are strong on this level. Now, what is good for us, because there is something that is bad, there's something that is good. If they take back control, they get fucking annihilated. We go directly to target in one candle, okay?
But this is happening because we've already had this expansion move, right? The AAA setup's already taken place.
Yes.
So this is why we're then seeing price stall at this level.
Yes, exactly. Now, like you had the expansion, now it's like an elastic band. You cannot only throw. You need time to get it back to normal state. Then you can throw again. Okay. Imagine like a crossbow or a bow. To shoot an arrow, you have before to do it again. You cannot shoot two arrows in one. So this is how the market really moves, okay? So they are now, it seems like a buy accumulation. It's not the best one, to be honest. But I see that there is a wall here. Like I'm not taking a trade that is not protected. I'm taking a trade that is protected by a buy wall, okay? On a $25,000 day, what am I risking? 2,000, not even 10%. It's okay. You can build on the profit. But if we break this level, we start to go back in the range. You know that you made what you needed to make, okay? And for example, now I will be really in anxiety if I see this level not holding and knowing that if it shoot down, I give back to the market 25,000.
Yeah.
Like it's also risk to reward. It's not only when you take a trade, it's also when you manage a trade. This is something that everyone forgets.
Yep.
Not many traders are right. They take good trades, but they want to shoot for 1 to 40. If you close 1 to 3, 1 to 4, maybe you have 75% win rate. But they want to shoot 1 to 40 and they have 90% losing days. Hey, but I'm still profitable because one day in the monte. Okay, is it sustainable to do with million? Where you see I go and draw down 100,000 to make 10,000. Yeah, but I'm profitable. Yes, but your brain, how does it work? So what happened here? Failed auction.
Yeah.
Okay, so we don't want to be in this trade again.
Yeah.
There is only one condition where we can be in this trade again. If we break this eye,
Okay.
we take the test. But now the market, I know my chicken is going to go here again. Why? Because all this movement is not efficient. Auction market theory always rebalance movement. Okay? And this movement is not balanced. It's a huge expansion without testing anything.
Yeah.
So it's pretty risky. Now it's also not clean at all.
Well, in terms of range, I did want to ask, like, what's that based off when you say range chart? Like, what's it?
It's, oh, but I like this. It's almost based, it's based on what's closest to the 5 minutes. Okay, 40 range is really close to the 5 minutes. But you see, but I like this one. Wait a second, it's because I want to cover behind this. You see, we are going to auction really good high. And I want to cover here. We are going to have a risk 1,600 for the last move up. Okay, this is a trade that is worth to do. Why? Because they show me that they went below the structure.
Yeah.
They completely failed. What does it mean? That there is something here in terms of passive orders. There is a huge absorption. Okay. Now, position management. Okay. If they break this level, I can put all my stop loss below this.
Yeah.
So I'm still risking 2,000, but now my profit potential is way higher. Okay. So this is the concept of managing your trades. You see, still 1,400. I can even load 1 contract more. 2 contract more, sorry. Better not from here, but better executing here.
You're showing right now, you're showing how you have to be near the speed.
Fast.
Yeah. And we saw how, normally you're on like a PC.
Yes.
Yeah. So you saw how like we were struggling to drag it down.
Yeah, because you need to be fast. And I was clicking on the level, but usually in my setup, I have 4 screens.
Yeah.
Okay. Like it's not easy to trade with a trackpad, guys. It's really, trust me. But in my trading room, home trading room,
yeah,
I'm faster. I can promise you. And also I lost a little bit of time to explain.
Of course, yeah.
Let's see how we are going.
Don't know where the market's going next? Stop worrying about your trading. Just get informed on exactly what's happening in the markets and what to expect. From Forex to futures to stocks to crypto, be on top of it all. That's why tens of thousands of traders are subscribed to Market Journal, a free newsletter that allows traders to keep up to date with the markets every single week. Remember, an informed trader is a profitable trader. It doesn't matter if Trump tweets, AI stocks are pumping, or if Bitcoin drops out of the sky. Market Journal has you covered. Join for free today using the link in the description below. Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZella. TradeZella is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a Forex trader, whatever trader you are, all you do is connect your trading platform directly with TradeZella. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZella does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, back testing, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZella, so use WOR for 20% off your yearly subscription, or Riz10 for 10% off your monthly subscription. The link is in the description below. Now let's get back to this episode.
aggressive sellers, again, buyers protecting the level, but at the same time, buyers are getting absorbed. So now I'm not really confident on this. Why? Trapped buyers, so much aggressive sellers. Fortunately, we are risking so less.
Yeah.
This is what keep you, but you need to take a lot of, but I'm relaxed because I'm risking a small portion of profits.
Yeah.
And when you risk this small portion and you build for the day, you are sitting on 22,000. Like, what is the worst that can happen? You close to $20,000.
Yeah.
What's the problem? When you start to be aggressive at the start of the session where you don't have profit, your brain plays tricky games. There is a huge part about the mindset that people don't understand. But when you are in drawdown, you have less clarity. Okay? So your role is immediately to build a cushion for the day and sit on it.
Yeah.
Like a king. Okay? You stay there. The worst that can happen is you lose the profit back. Now, let me comment this. Again, on these big sellers, this is completely dominion of sellers. Okay? So this expansion high that we were trying failed. 2 times it failed. Okay? We still want to be long. They didn't broke the structure. We trailed our stop to make it slow, but they didn't broke the structure. We are still sitting at $20,000. We can, you see, aggressive trades on the bottom. We can still try to get it on the way up, building at the top of the range. But why? It's not that we are getting crazy now and we want to start building, because they show aggressive trades on the bottom, completely absorbed, again, 1,120. Okay? The reason I fraction is because I'm fast and I can understand really fast how much am I risking. Okay? If you put immediately 10 contract, you cannot build exactly in the level to make the risk always 2,000. Maybe you load everything on the top, the market snap, and you risk 4,000.
Yes.
Okay? But by putting risk in the markets this way, you can still do it. Now, it's getting a little bit dirty. This is not easy to read, but I will make it easy for you. Protection level from buyers, protection level from sellers. Okay? We are covered below the protection level for buyers in this case. We are positioned up in the range. This is not where I should have put my position. I was slow this time. This is where I should have put. As soon as you see aggressive sellers, because in this case, I could have already been break even.
True. Yeah.
Okay? Let's try to shoot for an expansion higher. You see again, on the top of the range, what happened? Buyers, aggressive, absorbed.
Same at the bottom,
Absorbed. Okay? So
It's
this is the
tighter,
fight. This is the fight. The smaller compression range gives the best upside potential.
Interesting.
Now I like to put horizontal level on the last protection level. Before, the last protection level was this one. When you understand it, it's not so hard to get it. It's asymmetrical risk. They load again aggressive, again absorbed. Okay? You can see every time they try to go here, bam, 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 bam. Okay? What we can do is get a buy stop here, because if we arrive there, we put all our risk here. So still lower, still 2,000 risk, but more upside potential. This is the game. And also, if they touch this high, it means that buyers won the battle. And if they won the battle, I want to be on the side of the winner.
Of course. Yeah.
Let's see what they can do.
Failed. Defender.
See, the risk of executing a lot of trades is that you get caught in this consolidation.
Yeah.
And you pay a lot of
money. And this is why you normally walk away, right?
Why I walk away? Because I take only the best AAA. This one is not a AAA, but it's a setup that can explain to the viewer how you momentum trade.
Yeah. So when you walk away completely? You don't look again?
Don't look again and start to do something else, because otherwise, if you see something interesting, you want to open. But I'm profit, let's risk something else.
Yeah.
You see, this is destroying the buyers. This means that this is the protection level. Okay? They try to go again here. What's happening? sellers controlling. Done. Okay. 17,758 for the session. And now again, buyers. Okay. You can continue to build up for the day. You can use this 7,000 to make another 25, another 30. You can do it, but not from here. Okay. It's not smart to do it from here. If we need to evaluate a new trade, we need to break, because otherwise this action and also these big buyers is not really sitting confidently. Okay. We want to try a last one in this case if they break.
Yeah.
Okay, so we want to see this one not holding. Let me buy stop here, buy stop here, buy stop here, and the other one I can load on the retracement. Now, what the market is showing me, they have results.
Yeah.
So it means that the level that we used to close our trades was perfect. This level one was perfect. And this exactly, you remember we closed here, okay?
Yeah.
This was exactly when the market started to slow down.
Yeah.
Now we are betting on the reaccumulation phase. That it's a really good trade. The problem is that every time they go to test the accumulation phase, you are liquidated. So you can take a lot of small stop loss, but 5 small stop loss is $10,000.
Exactly. Yeah. Like, what are your
this absorption?
Okay. I was going to say, like, what are your thoughts? Like, I know we're profitable for the day, profitable for this session in particular, still, but after taking, I think that was 3 stop losses.
Yes.
Like, what are you thinking? What's happening?
Totally okay, because I risk in a momentum trade that is valid. As soon as you have a mental process of a setup that can pay you 5, 4, 6 times the risk, I'm okay. Like, I'm not worried at all. Like, we went to 24,000 to 17,000. I'm calm. I know that for the day, we were 24,000, okay? We can still go to 10,000 for the day. So I have still a little bit to risk.
Yeah.
Because I only risk the profit of the session.
Yeah.
So we are up 8,000. We are still profitable for London. We can try to build another trade and close at 30.
Yeah.
A 13,000 trade will be good, but the market is not giving us, and this is important, guys, to understand, the condition. If the condition gets this, you cannot watch this and say, I want to make, no, because the market is saying to you, we are in contraction.
Yeah.
We can stay like this 4 hours. What are you going to take? 7, 8 stop loss. So now they reach again the protection level that is on the bottom side,
Yeah.
okay? This one is good. You can bet on an expansion higher. But on this one, I will take a smaller risk. Like, I will not risk 3,000 or more. Not even the time. You see, while I explain, the market already unfolded here. So what I want to do is loading here, protecting myself here, because what does it mean? That if we reach here, this one won the battle.
Yeah.
If this one won the battle, this one probably is ready for squeeze.
Okay.
Okay. Absorption here, again, I like it. This is a level where we can cover ourselves. Now, risk to reward wise. Let's check 10 contract here, okay? 10 contract. We are risking 2,700 to make a potential 10. Okay, it's not bad. The problem is that, again, they are not holding. So I need to cancel. You see how much you need to be dynamic,
Fast
and dynamic, and understand how the market is behaving, okay?
How easy or hard was it to be dynamic, when you was developing this skill set?
It's all about real execution. Like, everyone thinks you need to study on books. Like, I'm not a big fan of theory. I'm a big fan of practice. Start with a 10,000 account. Try to build it to 20, 30, 40. In the process, while you build the account, you understand so many things that you understand also why some trades are not worth for me. Okay? So I'm a big fan of practice.
Yeah.
And for example, now they did an amazing failed auction, the sellers. We can jump in. Sorry, sometimes I stop, but
Don't worry.
it's really hard to...
No, that's what we're here for, yeah. This is what we clarified on the Chart Fanatics episode, that was live charting.
Live trading is more difficult, guys,
Yeah.
because you need to be super fast in your mental process. What I saw here is the last point of protection from buyers. So if this one doesn't hold, we are done for the day and we go down.
Yeah.
But if this one hold, I'm risking 2,400 to make a potential 10, 15. I can bring the account to 30,000 for the day. And it's not a lot of movement that I need.
Yeah.
Okay. And also, if I'm fast, this 2,400 can go to zero risk really fast.
Mm-hmm.
Sellers taking control back again on the level. Now I expect to see these buyers passive showing the upper hand. Okay. So all this area is the protection level that we have.
Yeah.
Let's see how we are doing for the day. Aggressive sellers again. Done. What we can expect now? Acceleration. You see?
Yeah.
Now we are out of the range. Now look, aggressive sellers on the bottom, and you can expect, now we can expect to arrive back here. Okay? Now, what happened? This is important to understand. We took 3 trades, and we took 3 trades that were on the long side and 4 consolidation trades, okay? In these 4 consolidation trades, we took stop loss really small. We are still $5,000 in profit. This is the power of risk to reward, okay? This is the power of building profit for the day. Now, in this case, the setup that you can evaluate, the AAA, is this one, okay?
Yeah.
It's on the test on the upper range. This one is an amazing setup. You can also try to shoot at least for this eye. So this is a setup that can bring you to 15,000 to 40.
Mm-hmm.
Continuing to engage here, for me, it's not worth it.
Yeah.
Because it can
But
continue.
it wasn't worth for you anyway, personally. It's only because we're shooting this
It
video.
wasn't worth for me if I was alone, but for me, $10,000 is not changing my life, and I'm really happy to show also how to handle drawdown, okay?
Yeah.
It's not switching my mood, but it's giving to the audience an understanding of asymmetrical risk to reward and why it's not worth to engage it,
Yes.
okay? The next video that will come out on my channel is one session that I started, and I took like 6, 7 stop loss, 8 stop loss maybe, exactly like this, okay? So the first content on my channel will be my worst session. Why I'm doing this? Because I want to teach them that it's an exchange.
Yeah.
You are putting risk in the market. The market is giving you back something. To make a session of $15,000 in profit, you need to be stoic. You need to be strong enough to have a 10,000 drawdown and continue your life like nothing happened. This is what they need to understand before. The discipline that it takes. And to build this, you have to go through a journey that starts with losses. This is the reason I wish everyone, they will kill me, they will say that, but I wish everyone to enjoy their bad days and streak of stop loss, because you will bless these days because they teach you how to survive. You cannot be a boxer if you don't know how to get hit and stay still standing on your feet. It's easy when the market, for example, if today was first wave, second wave, third wave, $70,000 for, but this creates in the mind of the viewer of Chart Fanatic a wrong misconception about trading, because they expect that they can do this. This session was perfect because we were precise. We protected our profit. We took 2 AAA trades. Then we start to brag around. What can we do? What can you execute? I want to explain momentum. This is what your brain does in real trading, specifically when you want to merge the educational part with the execution part, because you feel that you need to do, okay? This is the same pressure that people get when they start trading to pay the bills. No, but I need to make this profit for the month, otherwise I cannot pay my bills. This is what destroys you. It's pressure. And this is what in the World Cup, for example, happened to me. Like,
Really?
I was trying to shoot for the first place, and I sacrificed that 6% profit that if I would kept, it would have gave me the first place. I still close with a 500% in 12 months of live execution, but I could have got the first place. Why I didn't took it? Because I want to show to the world how much I can make. This is pure ego.
Mm-hmm.
You take execution that are not following the models, you are still profitable.
Yeah.
But the first one was 220%. I closed 220. So you sacrifice the possibility. And this is something that people need to understand. Now on prop firm, maybe it's a little bit easier because it's not your money. You don't care, okay? But when you have a personal account, it's big enough that it's millionaire personal accounts, you pay this error in cash and immediate. The trading is the only teacher that removes error from you in form of cash and immediate. So be really careful about this. As you can see, big movement. If we rewatch the session after this, it's not worth to trade because usually you have consolidation.
Yeah.
You will see that probably prediction is right. Okay, probably they will skyrocket up, but it's the same as I was saying before.
So
while you try to take the short, how many times you get liquidated? Okay, this is the lesson that I can give to them.
Well, it goes back to as well what we were saying, or that question I asked earlier is why don't you hold? Why don't you hold? But imagine holding.
Holding and seeing that only this win is 7,000 less.
Yeah.
It's not worth. For me, it's not worth. Like, you can just cover yourself. As soon as it breaks, you cover yourself and you trade. Hey, but then it went back and it removed you. Yes, but why I close my trades here instead of waiting for stop loss here? Because I prefer to have a controlled risk, but big winner, instead of having one huge winner, but if it goes bad, I give back all the profit of the new session.
Plus, why would you do that anyway when the concept and the framework of the trade is based on the fact that they failed here?
Yeah, they failed.
And
they
therefore,
completely failed.
You could say give it breathing room, but
like
why?
Here, the trade that I was trying to fade, it's called value area low fade, okay? So it's a bet that you go from the downside to the upside.
Yeah.
There is only one market condition where this trade is not profitable, is when the aggressive buyers are stuck, so they cannot break, okay? So as you can see, also if we tried again here, we will have again take another stop. It's not worth it, okay? Probably we rebalance the session and then we go again up, okay? And this is, I want to show you also something that the stop loss that we took, here from the starting of the session till now. Wait 1 second, I want to show them the single trade. Look at these rates. This was the session. Look how much, they are a lot, but they are small, they are controlled.
Yeah.
Okay. I don't want that a loss can be like this because otherwise it brings back all my profit. And also, this week, this is really important to understand. This week, my equity line of the sell trades, it's almost in drawdown. It's 1,700 minus. The equity long, it's $67,000 in profit. Okay. This is important to understand because it means that in this market scenario, the sell is not profitable. And I know why. Because when you have a huge expansion down, like Trump trades, okay, the market will try to build again till the level of inflection down.
Yeah.
Because market maker want to transact efficiently.
Yeah.
And this is the reason you have building of the session, of the week like this. And then if you join the direction against the squeeze, you can build a lot of profit for the session. So as we can see, down. Now it's 5. Usually they move in the power hour.
Yeah.
So usually you see, now we will stay in this range probably for another 1 hour, 2 hour. Then they reaccumulate down.
Yeah.
And in the power hour, you go up.
Yeah.
I will show you, I will send you the screen of the power hour session. Usually they do like this. This is called P-shape in volume analysis. It means that all the volume is built on the top part.
Yeah.
You go back to test to reaccumulate and you rebalance the profile and then you continue. This is a model that I gave to Chart Fanatic. And it's this is the momentum squeeze that we took. The second one is this. Absorption of the sellers.
Yeah.
And then skyrocket up.
Definitely. Because the other thing to note as well about, why don't you just hold the trade is the fact that you were done in 10 minutes.
Is when you are done in 10 minutes, you need to take and go home. Maybe it will not be the most educational session, but you need to take and go home because it means that the market expanded in the first hour of the session.
Yeah.
90% of the session that expand, they rebalance till the power hour.
Gotcha.
This is the structure of the New York. If you expand immediately, and Trump is not waiting, you rebalance, expanding power hour.
Yeah.
Okay. This is the reason 90% of my execution of Model B, testing of the value area after their expansion, is from 7:30 European time till 9, because it's the power hour movement. This is what you can expect. For example, now, the market is giving you, because every indicator have a weak point, okay? The big trades have a weak point when you are in consolidation, because they are just fighting, but no one is winning at the moment. If we want to add another proxy, we can put the cumulative volume delta, that is the summary of all the delta exchange in the session of the contract, and this gives you the pressure. As you can see, also the cumulative volume delta is not so defined. In the starting of the session was so clear, we are bullish. Now they are selling a little bit, buying a little bit, selling a little. Don't engage here. Don't engage. If they break, we have another trade. Probably not before power hour.
That's okay. That's okay. It was more than enough just to start off straight away with $10,000 win, which was a 1-to-5 risk to reward, which was insane, given the fact you'd already made $10,000 as well, in London session, as well as then after that $10,000 trade, we then took, was it 1 or 2? I think it was 2 more trades.
I think it was 3 more trades.
Yeah.
And, but it was crazy the drawdown, because when you took a trade, if you can put your stop loss to 0 in the first minute, it means that you are joining the battle on the momentum side. Removing the stress in the first minute is something that is crazy for this field. I do also swing trading based on fundamentals. Everyone says how you can scalp. I want to say to them how you can swing. For me, going to sleep with a stop loss in machine that I'm doing that, I wake up with anxiety.
I bet, yeah.
It's different approach. Just there is not the right one. If you are a scalper, you are usually one person that is patient, and this one person that is able to control emotion while you trade.
Yeah.
If you get excited for 5,000, 10,000, oh my God, I knew that I shouldn't have opened. Now I open again. It's not for you. Like, leave it there.
How have you always been, more stoic and calm?
No, I started with my first account that was scalping the Nasdaq on CFD. And I was always trying to trail my stop loss, but the spread was fucking me up, because the spread is always widening in CFD broker, it. And I was getting so mad that I would execute again if the stop loss was taken by spread. This will destroy my statistics. Like the win rate is way lower than 40%. If you can get 40%, 50, 60% in the best month with 1, 2, 3, like your equity line is like this. So it's and I've not always been like this. I've been like this when I start to detach myself from the output of the session. Like, I don't even watch the performance at the end of the day. I watch at the end of the week. Like, for me, a 6 figures week, it's amazing. This one is 60,000 for the week from Monday. It's amazing. And I know that in 5 days around, I win 4 days and I lose 1.
Yeah.
So when I start to see that the session goes bad, the conditions are not bad, usually I walk away.
Yeah.
I don't let the market take 6, 7, 8 stop loss. My rule was 3 losing trades to stop.
Yeah.
Is exactly what we did here. In the starting of the session, I give more room. I have 4 or 5 because usually you have consolidation and then expansion.
Mm-hmm.
This is exactly what I noticed to be the best approach to survive in this market, and also study your market.
Yeah.
This is Nasdaq. Study your market. If you trade DAX, the model is completely different. You will trade in the morning.
Mm-hmm.
So to reply to your question, no, I've not always been patient. I've been really an ADHD guy, wanted to execute there.
Mm-hmm.
But you understand that you don't make more money by being more active. You make more money by selecting better your trades.
Mm-hmm.
This is the best lesson that you can get.
And in terms of your speed, have you always been able to operate at speed when it came to execution and management, or is that something you had to develop and refine as well?
Let's say that you need to be really good not only at moving orders but in decisional process.
Mm-hmm.
Like I noticed that trading is really connected to your life. If you are an overthinker, scalping is not for you, because you need to take a decision fast and you need to take full responsibility for the decision that you are taking. Absorb on value area low, they are trying again to auction high.
Yeah.
So you need to take full responsibility for what you are doing, and you cannot overthink.
Yeah.
I have one friend of mine, I try to teach him for free. He spent 1 week with me. He's a person that thinks, this kind of guy thinks over and over and over again.
Yeah.
In the moment that he was thinking about executing a trade, the trade was already take profits.
Yeah.
Like scalping, it's not for everyone. I want always to be clear on this. It requires certain trait of behavior of the person that you cannot learn.
Mm-hmm.
It's not something that you can learn. You need to be prone to have this kind of trading approach, and something that unfortunately you cannot learn. Not always you can learn. You can be the best at learning the fundamentals, the technicals, but if the way you are is totally opposite to this, you will only try to fit yourself in a box that is not for you.
Yeah.
Maybe you are an amazing swing trader if you are an overthinker.
Yeah.
Maybe you are the best option trader because you have a rational mind, statistical mind, but it's not for you, this kind of approach.
Mm-hmm.
And you can of course work, but why working to fit in a model that is running against you, And if you are fast in taking decision in life, if you are changing idea fast and have a really low ego and willing to take a stop loss because you are wrong and immediately jump on the train, you can be an amazing trader that follow a model like this. Yeah.
And what was your process like of learning order flow?
Learning order flow arrived only 6 years after I was trading, because I was trying to get to understand why a pattern works. I will give you an example. If we have a daily high or a daily low, I noticed that when they spike down or spike up, you have a movement. So now it opens a lot of conspiracy theory. They are hunting, they are ready to take, they want to liquidate. So I started to study what happens in intra-market structure. So you need to go down, you need to understand, you need to study interaction of the order. And I understood that simply what's happening is that the aggression of the sellers is not as strong as the passive orders.
Yeah.
And you see absorption, you see absorption, you see absorption, and you see absorption, okay? That is what is happening here. Is not that they want to take your stop loss here, just they are trying to push down, but passive orders are holding.
Yeah.
By understanding this, my whole understanding of the market did a level up, because I was not guessing, will it be a stop run? Will it be a failed auction? Will it be this? Will it be that? Now I understand exactly what's happening. For me, I can compare this to the switch of driving a car, okay? If you drive with price action, you are trying to drive watching the Waze or Google Maps, okay? But you don't see the street. You just know that you need to go from here to here because the structure is like this. When you start to see car, you can see obstacles.
Yeah.
You can see that you are stationary because there is traffic. Why we are not going? There is traffic, there is orders, okay? So this was a big level up for me. This was an understanding of the market that I never had before. And this is the reason I'm sharing so many contacts for free, because I really want to give back to the industry something that is not conspiracy, but something that is really how the market really moves. Like there is an exchange, there is an aggregation of the order. This is actual execution. People pressing buy or sell is not an indicator that is giving you a MACD cross.
Yeah.
So this is what changed my life, what changed my perception, and I'm really enthusiastic to share with the world this approach that can help everyone. You don't need to change your trading model. You can implement in all the operational. You can see here again.
Same thing.
Same thing. Buyers trying to grasp. They did the liquidation of the high. Now they are going down. Now just they try to press, and you can see from the total orders they are pushing up, breaking, no. Why? Not enough aggression. There are passive orders getting this liquidity that are creating a range. But it's normal if you think about this, like the elastic. Look how many orders they loaded.
Yeah.
Now they are resting, they are breathing, they are understanding what they want to do next. And then you will see either aggression and we go to rebalance and we have AAA for power hour, or they're just saying, look, we want to reaccumulate here because we are pushing, we go up.
Yeah.
Now, for you, watching real-time order flow is giving you a better understanding of what's happening behind the curtain.
No, definitely. I remember it changed my perspective the last time we sat down, because it really opened my eyes to how detailed of an understanding you can have, regardless of even trading it or not, just being able to understand why the market is reacting here, what's happening. Because even here, even where we've taken these stop losses, none of those stop losses meant, oh, we're wrong. It's understanding that, okay, here's an opportunity that can generate a good risk to reward idea.
Exactly.
Backed by understanding what's happening behind these candles and these movements. Because there'll be people who have none of this information, just the candlesticks.
Yeah, they see
and they'll still be
yeah.
executing. Yeah. They'll be going, okay, look, below this low stop loss or wherever it may be. And yet, in this understanding, we are able to scale back and take a step back and say, okay, 3 times now, the auction has failed to do anything. The buyers and sellers have failed to take over or any control. So we stop and wait and watch. And we still, off the back of that, have a AAA area below. Timing might be a factor that might not come into our advantage. But we now still have that. And we also have the, if the auction was to break the high, then maybe there's something. But at least we understand, okay, now the time's done. And this all comes after the fact that we had a AAA sell.
Yeah.
And profitable result.
You know why it's convenient? Because you know always also when to stay calm. Like when you see orders not having a reaction, it means that the liquidity wall is getting so thick. It's like if you are punching a wall on the upside and on the downside. This is what is happening. When you are here, you don't know. But after 20 minutes that you are here, you know that you don't want to engage.
Yeah.
And this is the condition that is creating the best squeeze. Because this can be also a pre-market condition and is giving you momentum trades or AAA.
Yeah. And what's the reality in terms of, obviously both of our sessions have gone very, very well in terms of the market movements, the predictions, today in particular, live trading, with good size and making a good P&L for the day. What does it look like like this week's been really good for you?
Yes.
But what does it look like on average? The average performance over, let's say, this year. Are you having losing days? Are you having, that sort of, performance?
You are having losing days 100%. But what I'm really good is at cutting the losing days. As I was saying to you, like I have statistics on everything. Like people journal in the weekend. No, people go to dance in the weekend. What I do in the weekend that is really boring, I go through my metrics and try to understand what I can improve. Okay. I notice that the days that start with 3 or 4 or 5 stop loss end up with a losing of 20,000, 15,000. I start to cut them at 8, 9,000. Okay. So of course I have losing days. It's really difficult for me to have losing months. The last losing months that I had was March 2024. And if you go to see, it was like lack of volatility. I'm a trend follower. It's killing me. So of course I have losing months. I work with big capital.
Yeah.
So I don't try to get huge percentage like 200, 300%. Usually what I do, you can have a good frame by dividing the performance of the World Cup by 5 or 6. Okay. So if in the World Cup I did 500%, usually in my trading account this year I did 100%.
Gotcha.
I did 80%. I did 70%. There's still for a private hedge fund, because I'm working with my personal capital of multiple millions, it's an amazing performance.
Of course.
But for a retail trader, it's not enough. Like, it was crazy because when I talk about performance, I start to say 60, 70% per year is not worth it. Why? Because I trade with 1,000, it will be $600. It will not even be to pay the bills. Scale capital. Like, they try to scale performance without understanding that the real focus point is how much capital can you manage. And also, it's really important to understand, because I received one question, why you don't open your own hedge fund, or why you don't go to work with this precision in an hedge fund. The reply is only one: capacity of the strategy. What does it mean? How many millions I can manage without getting too much slippage or having a feeling point that is not so good to the point that is worthless for me to execute.
Takes away the edge.
The capacity of the strategy, scalping the Nasdaq, yes, I can diversify with AS, it's around 25 to 40 millions. For a hedge fund, 25 to 40 millions, it's peanuts. They work with billions, they work with hundreds of millions. So this is a model that I love, that can be amazing for me. And it's a model that is purely relying on order flow and market interaction. And the reason I'm sharing this with you is because even if you study, okay, you will not take my brain out of me, the market understanding. We are never going to have the same execution point, because the mental process and the neural network that you have in your brain is getting deeper in understanding, but there is discretionary. We are taking discretionary decision. What does it mean? We have a model, but we put on leverage our understanding of the model of the market. That's the difference between quant. If my strategy was quant, so I always have the same execution pattern, I couldn't share with the world, because in this case, my edge will go to zero.
Of course.
Okay? And this is the reason also. Now, there is still a trick to execute this model on multiple hundreds of millions by understanding that Nasdaq and S&P 500 have 95% correlation. S&P 500 is a lot more liquid than Nasdaq. I can split my execution and I can work with more capital. Of course, this is possible, okay? But it's important to understand the capacity of the strategy, specifically if you are a scalper, and where is your limit. My limit is scalability. This is the reason I'm studying with Andrea option models, because they can give you statistical and mathematical consistent return with scaling with a lot more liquidity. Like, I know that if I want to trade 1 million account with this strategy, it will not be possible. So by making 15,000, I cannot make 1.5 million per day, because imagine we are loading already 10 contracts, okay? To make 1.5 million per day, we need to expose 100 times more. So here I will need to execute 1,000 contracts. 1,000 contracts, I will bring the market here. So I'm already losing my edge. So this is something really important to understand.
What was your sort of starting capital like?
My starting capital in 2012 or 14 was made by crypto. Like, I always say to my audience that I make a big portion of my wealth understanding market cycles early with on-chain analysis. So I jump really early on the train of crypto, and I understood, because this model I also trade on crypto. You can imagine with leverage what you can do with crypto. Like, I managed to take one single bull run on leverage completely on futures. You can imagine the return. This built the first capital that I had, and I can say that I never hold a dollar. So I have an account for only daily expenses, mainly my capital with this deep understanding. It's always either in trading model, either in long-term options, either in crypto, my portfolio. So even if you understand with 5, 10, 15, 20,000, if you manage risk properly and you have two income, freelancer income, because I did, to get the starting capital, I did a lot of work. Okay. I was doing server monitoring in the night, database from midnight in the night to 8 in the morning. And with 4 hours of sleep during the day, I was starting to trade. So it was really stressful. And with this capital, I understood how to allocate and how to diversify. You have income from trading, you have freelancer income, and you have your cash deposit that is bringing constant because you understand the halving cycles of crypto. So you have three forces pushing in your direction, and you know that every dollar that you put in today will be $10 in 5 to 10 years. This is creating an exponential curve, and is what is giving me today the possibility to trade with multiple millions account personal, and it's giving me today more than 50-60% of my income coming from trading. And other than this, I run business. So I have a SaaS at the moment where I'm putting all the effort that is an order flow platform, not yet started, but I already know that it will be good because it's built by the best traders on the world. So we are gathering all the best traders and saying, what do you think about this? I want to give a shout out to Carmine Rosato. I enter in the call with him and I say, look, how will you make this better? Okay. So when you create something by people that actually make a lot of money trading, it cannot be bad because you will ask them what they need. Okay. Other than this, previously I was doing education. Now I stopped doing education. I'm giving everything for free because education, it's a lot of effort. And at the moment, it's way more profitable for me only focusing on trading. And what I plan in the future is to focus on hedge fund advisory. So to be a market strategist and provide models for hedge fund, because this is what I love. I love to create models, either quantitative, either discretionary, either statistical model, and solving the Rubik cube that is the market is always something that gives you a thrill and excitement because you are fighting against PhD hedge fund. So if you can understand, it's not only how much money you can make, but the ability of brain stimulation that it gives to you. And it's something that never stop. You cannot use the same model for 10 years. I always try to refine. For example, you see, I make it all low because I can see better candles, so I can see the interaction. It's constantly developing. Also because the market is constantly developing. So I know clearly that you cannot put a static model on a dynamic market. It's impossible. Even if we took...
Still back in.
Even if we took a short, or if we took along with a really large stop loss, liquidity.
Still get liquidity,
So there are situations where you don't want to engage. Now, volume can help you a lot because you see that you are still in the range with volume. So price sometimes goes on its own, you know, spike, but then you need to validate with volume because it's the merge of volume and price that is giving you an actual edge.
In terms of when you plot on your volume profile, like where are your start and end points? How do you justify or determine that?
This is a really smart question. So what I have two ways of plotting. Either I do it in compression range if I want to play the ping pong between the area, but the best way to do it for momentum trades is from the expansion movement. So you can see contraction, expansion. So what I do is I plot from point A to point B till the actual price action. What I was trying to explain to you is that we have a P shape because all the volume are concentrated on the top, okay? This market environment cannot go on forever, okay? So usually what you do is you go to the value area low, okay? It will be amazing if they also test here. And then you have an expansion higher. This is the trend following model, the AAA, okay? So all the volume is here. They are reloading from here. This is the level of the value area low. And you always need to understand that you cannot take every swing point, but you need to get the first directional move of the session. If this was pre-market, this is New York session, opening, okay? The game plan is done. And then also there is a really good model that is called Orb model. I don't know if you ever heard
Opening
about
range.
opening
break-
range
yeah.
breakout.
Mhm.
Okay, this is a model that if you put in a context, it's really strong because the model is saying, look, that this low is not getting touched 80% of the time.
Yeah.
This is strong because it's saying to us, look, that you are going to reaccumulate from here, and what you have. This is the last protection point of the sellers. Look at the delta of the buyers. Complete control. When we went down, who was controlling price here? Sellers. Okay? Now that it's buyers, you see that aggressive sellers on the bottom already bouncing back. We didn't even reach, but you see that sellers have a hard time now going down. Okay? So you can try to take in this range a triple A setup that shoot for the 25,163. Okay. In this case, why even if I was alone, I will stop because we reached 24,000. Okay. We went to 15,000. How much is it? It's on the trailing profit of the day, 10,000, 9,000 drawdown. Okay. I don't engage. Why? Because the market condition now is getting hard to trade.
Yeah.
Okay. So in case where you really have a triple A aggressive seller, you can still trade. You are trading 2,000. In the worst case, you are still profitable not only for the London but also for the New York.
Yeah.
Okay. But usually the statistics never lie, and you need to understand how to manage your emotion. Otherwise, as a scalper, you will see opportunity everywhere. Like if you don't understand how to qualify and frame them, you will see opportunities everywhere here.
In terms of statistical analysis, like where did that sort of passion to study that come from, and how helpful has it been for your trading?
When you understand that this number is directly correlated with how much statistical test you run. For example, when you want to take profit, you need to understand the strike point of the take profit, okay? If the VWAP high is here, and I try to shoot for here, I know that 9 times out of 10, it will reject the VWAP, okay?
Yeah.
I ran extensive statistical tests on this, and it came from the necessity to boost the win rate. Because boosting from 30 to 40 to 45, like I have now, percent win rate, it seems like a small number, but 15% win rate more with this risk to reward, it's a lot risk.
Yeah.
It's a lot. I have also a trading model on another account, 1-to-1 risk to reward 75%. Like the equity line is like this because it's consistent, but I know exactly when not to trade. The model that I was saying to you only trades here.
Yeah.
So I switch, when I cannot trade this model, I switch to the consolidation model. Like here, I would have made a lot of money with that model. All these tests, you cannot base on personal perception. You need to have backing of numbers.
Yeah.
So what I usually do, I export all the data. I put in Python. Python have machine learning, neural network, all the infrastructure to make huge tests. You can know everything about your trading history. And I'm not in a position to take decision based on this. I go to Luca, one guy that helped me on this. Shout out to him, and he say, look, Fabio, it's not worth to take trades, for example, after 7 Italian time, European time. Why?
So he breaks down the data for you.
Your win rate is low. Like you have 20% win rate. So remove this. Perfect. On Friday, you always lose money. Like in 4 weeks of the month, 3 Friday you lose. Remove Friday. I have 1 day of vacation per day. All these kind of tests, I know for certain that a lot of people don't do.
Of course, yeah.
Okay? So it's giving you an edge. For example, before I had the model on crude oil, the model was amazing, but on Wednesday was giving back all the profit that he made. Because Wednesday, the volatility on crude oil, you can check on this, gets crazy. And this was a compression model. We removed Wednesday. The model was profit factor 2.1. Wow. It was completely consistent in what you do. So people underestimate the power of data.
Yeah.
So journaling, tracking the data, always understanding what's your metrics. Either you do directly in the platform, either you do in the journal, like you can use Trizella, the one of Umar, you can use everything, okay? But if you don't have data, you don't have a way to improve. If you don't have a way to improve, it's impossible.
Would you say that also what's super important is to not only dissect the data? So I just had someone on the podcast actually who was a systematic trader.
Okay.
right? So he will take the data. So, from the CFD space, you hear backtest.
Yes.
Everyone always thinks, bar replay, right? You just go back in time, press play, and then, try and do the whole risk reward
Yes.
as if it's live. Well, he was saying how in systematic trading, backtesting is essentially taking all of the data. You have to do a bit of coding. You can use AI to do the coding, etc. And he uses a program called a Polygon, he said. And essentially it will then spit out based on the parameters he's asked for. So let's say if he said price when it's over VWAP or when it's already extended, he does micro cap stocks.
Yes.
Small cap, sorry. So he'll be like, okay, price has done 100% gap and it's faded and the volume's reducing, stuff like this. And then he'll input that into Polygon. It will give him the statistics.
Amazing.
On 9 years worth of data, 4 years worth of data.
Yes.
And then he now has rules around his trading. So the trading is if A, B, C, execute, manage, and so on. So all the decisions are based off systematic, which was interesting though, because he goes, it has obviously its pros, but then it had, by sticking systematic, he had a good few years of a rough time. And he had
to have overfitting a little bit.
Yeah. And then he had to introduce some discretion and some of the intuition.
This is important because also Jim Simmons was saying that completely systematic edge have a lot of edge decay. What does it mean? That the system breaks so fast. My strong point on this is that I do analysis. I trade. I know that the model is adapt to every market condition. So if I'm not trend following, I don't trade. Okay. I put the power of machine learning on my data that is discretionary. I have the best of both worlds.
Yeah.
So this is the reason I had also a portfolio of system. Then I start notice every month. No, this system, 4 system broke out of 20. Replace them. I saw the profit factor. I compare with mine and say it's not worth to trade quant. For me, of course, if you are a Citadel, the market making it's worth, of course.
So how many different portfolios or sort of trading accounts and systems do you have?
I have a lot because I diversify them by edge. For example, this one is hyper scalping.
Yeah.
Okay. If I want to do intraday trading, I use another portfolio because I need to track independent data. Otherwise, I cannot do all the research. Option model is on another broker. It's Charles Schwab. Also, Andrea, Charles Schwab. We have separate account for everything we need to do. Crypto. I don't want to publish any crypto exchange or brokerage, but I do on another field. Holding, ledger, like I separate, like if it's a different business model, no?
Yeah.
Like I don't want the data from deep charts to merge with the data of world-class edge.
Of course.
Because I don't have clear margin, I don't have clear execution. Like people that trade everything in one account, for me, it's inefficient, okay? So I have separate account. I have the option account. I have the futures order flow, crypto scalping. I have the long-term investment. I have the stock picking account. I love to create models. Okay. I have the Nasdaq scalping. I have the Nasdaq intraday, and I diversify capital. Okay. This is 15,000 only on this model.
Yeah.
Okay. The option model is making 8,000. The crypto scalping with the run up is making another 9,000. This is compounding. The only thing that I don't accept is to put a model that is not beating the Sharpe ratio or compare with the Sharpe ratio of the other. Because if you put a distribution and if you see that you have 6 models with an amazing Sharpe ratio and profit factor, and you say, let's put another model just to diversify, but the Sharpe ratio is here, it's not worth for me.
Of course.
So I have like a Gauss distribution of the edge with all the edge that I put in the market, and I optimize and always monitor them. If a model is not profitable anymore, I remove, and all the other one recover the loss that the model did. It's an amazing ecosystem, you know. But still, the most profitable one is Nasdaq. Like there is nothing comparable to order flow scalping for me. Also on crypto, it's extremely profitable, but nothing algorithmic of option comes close to this.
Okay. So when it comes to the crypto, is that when you say that's profitable, is that the long-term investing, or is that even the? Do you do like the futures trading?
Imagine like this. I use the futures order flow scalping crypto as income, I use this income to funnel in my long-term account. The long-term account does only arbitrage and investment. Okay,
Cool.
arbitrage is getting profit for small inefficiency. Okay, it's quant, and is making not a huge amount of money. It's making 20 to 30%, but market neutral. And then on top of that, I have a complete understanding of presidential cycles, halving cycles, intermarket correlation to know exactly when to allocate capital. Like if I expect that Ripple will overperform Bitcoin in the short term, like what I did, I put 40% of the portfolio in Ripple, it went to $1.2 to 3.5. I liquidated, put it back in Bitcoin. You know, this is the stuff that I do. I'm always active on this, and it's purely based on data. I analyze on-chain data. On top of that, all the profit that I made with crypto scalping, order flow, goes back in these accounts, so they grow long term. The daily profit that I withdraw monthly is funneling here, so I have one ecosystem, crypto ecosystem. Then I have the order flow ecosystem, Nasdaq intraday model, Nasdaq scalping model, and options, okay? Because options can be also intraday. They can be 0DT. And now we are building all kind of model with Andrea. They are crazy model. There are models that can yield 80%, okay, per year. It's huge. Of course, the problem is still liquidity. You can do with 5, 10 million. You cannot do with 100. Then you have the long-term investing, so like stock picking. So what I do in stock, I'm giving a lot of edge, guys. On stock picking, what I do, I build on my own rules that can predict which stock is going to overperform the market. Now everyone will say, oh, it's impossible. So it's possible, okay? What I do is that I exploit one inefficiency of the market. What is this inefficiency? Congressmen of US, they have information. This information is not getting punished because they are allowed to do insider trading. So if they are allowed to do insider trading, I'm allowed to use their trades as information because it's completely legal. It's public available information. Not public, you need data sources, but you can work your way through. On this, I put my earnings model. So now what I'm doing, I'm getting the trades of the most powerful people on the planet, but I'm timing better than them using earnings model on intraday gap. It's going crazy, amazing. Like the track record on the brokerage, it's now we have also to say that S&P 500 and stocks are expanding, but still I run extensive tests. It's profitable also in rough times where the stock market goes down because you go on the defensive, you go on. Like I love to do it. This is the most funny models that I have because you need also to understand why they are buying. So maybe you see the politician that buys, I will not make name, the politician that buys 3 million with private account of one pharmaceutical company. After 2 months, they approve the stage 4 of the company. So you see like 200, 300%. This is something that from my side is not ethical that they can do this because they have a role in approval of this stuff. But not using this kind of information is unethical for my side. Why? Because these are public information. So if you are a trader, your role is to get always the most informed player of the market. If I ignore this data, I will stay behind all the people that use this data. This is my stock model. It's a little bit complicated. There are 4 models running at the same time, but it's profitable.
How do you manage all these things though? How do you track and manage all these different portfolios?
Like the stock model is so easy because I go through it on Sundays. Okay, so I prepare and do everything on this on one day of the week. It takes 1 hour, 2 hours because already the AI is doing a huge work on this aggregating data. I have my own platform that I built through the years that is making all this analysis. The option model, Andrea and Enrico, that is one of my mentors, built structure that you can do with 10 minutes per day. All in the evening, all in, I was saying something that I cannot say, all in certain time of the day. All in certain time of the day, and they have a huge profit factor, and it's not getting your time, it's not getting too much of your time. Okay. So the models that take the most of my time is Nasdaq scalping, but it's also the most profitable one. So also in time allocation, you need to understand.
Yeah.
Okay. And in the weekend, when I'm bored on Saturday, I do crypto order flow because we need to work. Like we need to. We reach the level.
Yeah, we were watching it in the background. I'd say, should we do like a recap of what's happened here?
So what happened here is that from the level of absorption that we were watching, they contracted back to the level that we were waiting. That is the triple A setup based on absorption. From here, it's a little bit early, but in 2 hours, you can expect that from here, they reaccumulate and go up.
Okay.
And we will check how it goes. But you see already they are really struggling. I don't know if it's visible, but they are really struggling to go down. It's the first time where they reach one level. And why they're struggling? Because this level is packed with aggressive buyers.
Yes.
Okay. Now they will touch the closing of the structure. And this is where you can expect a lot of aggressive sellers interacting.
Yeah.
And buyers trying to protect. Okay. Here you want to see buyers stepping in to protect. If you don't see it, done for the day and it's not done. You see, for example, here, I will never execute. They are controlling aggressive. This is like the momentum buy that we took. Buyers are trying from here to stop the movement. Now, if you get a complete absorption of the movement, you can try, like you were saying, the expansion up.
Gotcha.
You can try this trade, but the problem is that you have a really big stop loss. So you can cover here. I will not execute it. I will only put the marker.
Yeah.
To show. Like if you put 10 contract here. Okay, at the break of this high. Okay. So at the break of this high, these trapped buyers, you can execute. You have 10 contract for a 2,500 is too much. We need to lower the size. We need to go on 8 contracts. So now you're risking exactly 2,000. Okay. If you break this level, you have display. You can cover also below here by putting lower size, but already you cannot execute, you see. Control of the sellers again, trapped buyers. So the triple A setup didn't present himself today.
And again, back to that question from way earlier, if you held your trade.
Like, imagine
that pain.
Imagine we arrive here. So we closed here and then build another position. Now all the profit that we took, it's almost zero.
Yeah.
So we go back to the question, like, is it worth it if you have a really high win rate? But honestly, I do a lot of talent scouting. Like, if I see someone that is profitable, I always took the time to jump in a call with him and understand his edge, because maybe he needs capital, maybe he needs direction. But I've never seen an edge that is adding at the same time a lot of win rate and a lot of risk reward. One needs to be sacrificed. Okay?
Yeah.
And I mean not in 1 month, but I need on 12 months. Okay. So you cannot have 1 to 20 risk to reward with 75%. If you have, call me, because you are soon billionaire.
Yeah.
Right? You are soon billionaire. But you need to choose what you want. Okay. From my side, I prefer a balance. Good win rate, good risk to reward. In this case, we would have closed probably also in loss, because with this, then it cut all the profit of the previous one.
Exactly.
You are like we were attacking now the profit of a London session. It's really bad. It's better to take profit.
And again, just to really reiterate and get that point home, that's why I asked the question, to really see the reality. Now, Fabio, if we weren't here in the studio trying to make this video and to showcase live trading, he would have been done after that first trade. Right? Or the first setup trade, that first movement.
The directional one, that was 1 to 8.
Yeah.
The momentum one, we closed 25,000 for the day, it's done. But I'm really happy that we took this trade, because the audience can now understand and frame which kind of condition is not yielding a profit for the strategy.
Yeah.
So, contraction, that's the reason we only trade here and here.
Exactly.
Okay. So it's, I think with the previous one, this episode, and the ones that are going in my channel, they have a masterclass that outside will cost at least $10,000. That is totally free.
Mm-hmm.
You can study, you can try with price, because this model, the good part is that they work also on price action. Like, if you know what is an expansion phase and contraction, you can, for example, wait for the recovery of the top and get the expansion higher. You are not this is what I want to enforce. You are not forced to use volume.
Mm-hmm.
I use volume because it helps me to understand. But for example, for Forex, it's useless because volume is so fragmented in 1,000 OTC sources. If you trade euro dollar, British pound, it's better intermarket analysis.
Yeah.
You watch euro dollar, you understand the pressure of British pound, you understand the dollar, and you have a context of accumulation phase, distribution phase. You see maybe they spike a low, they failed. What does it mean? There is an absorption.
Mm-hmm.
You can understand by price this stuff, okay? But volume on indices and on commodities, it's amazing.
And one thing I was going to ask, actually, in terms of handling all these different portfolios, you're trading, obviously, weekdays, NASDAQ, hyper scalping,
Yeah.
your Saturday sometimes when you're bored trading crypto, you got the portfolios, etc. What's the reality for you in terms of your, outside of when we see you in the studio, outside of your trading windows? Like, how are you operating? Do you have to set up your whole life to facilitate peak performance?
This is something that I was hoping that you would ask. Guys, there is no coconut with straw on the beach. I moved to Palm View at the moment. I have one of the best view. I've never been to the beach. We have a private beach. I've never been to the beach. Why? Because this kind of lifestyle is sacrificing. I'm not only saying, okay, you have money, you cannot. No, because now I go home, I need to prepare. I have lives, I need to prepare the long-term setup. It's a lifestyle. It's like a bodybuilder, okay? They build their life around their work.
Yeah.
I build my life around my work. I have something that I cannot sacrifice. I cannot go out drinking, drifting with Ferrari, and the day later I wake up at 10 because I have stuff to do in the morning. And the only way to manage this life is being completely with obsessive compulsive disorder on organizing stuff. Everything needs to be a clock, okay? Mm-hmm. Because if you stop organizing this way, confusion will overcome you because you are managing multiple models, multiple company. You are at the same time trying to have a little bit of private life because your family wants to see you, something like this. So it's draining. Mm. And this is the reason I want to go on long-term, low commitment model options, because my capital is getting really high at the moment. For a retail, it's really high. And I know that I can already retire. Like, I'm 30 years old. I can retire the next 5 to 10 with an amazing life without staying all the afternoon in the chart. It's what I love, but it's draining. Doing this every day, it's really stressful, specifically scalping. And I know that I will never stop, at least to watch, because I love the market. I love to understand the market. Yeah. But like, it's not the life that people expect, okay? Mm-hmm. They expect you make your first 1, 2, 3 million, you walk away and you only enjoy life. If you do this, inflation will fuck up all the money that you have made. Yeah. And your life will be like this only for 1 or 2 years, and then you will go back to the rat race. Yeah. And it's a lifestyle. It's a lifestyle that I love. It's not heavy for me. Working is something that empowers me and make me feel productive, and it's not heavy for me at all. It would have been to break even now.
Exactly, yeah.
So we would have lost all the profit for the day. So this is an amazing lesson on how to manage also your position. This is an amazing lesson.
It was incredible, honestly, to see the speed. And I think you did a phenomenal job of explaining what you were doing as you were doing it. Because I remember when we had discussed on the last Chart Fanatics, we said that this isn't live trading because, live trading, I need to be logged in. So I was actually expecting me to kind of narrate or whilst you're trading, and then when there was an opportunity to pause, then talk about it. But you managed to do both.
If we didn't have to explain everything that I was doing, here with this position, I would
remember.
have loaded another 10.
Mm-hmm.
So we could have made 40,000 on the way up. But doing this means that you load 2 contracts at every breakout.
Mm-hmm.
It's impossible to do this. Manage the stop loss at the same time explaining what you do.
Yeah.
But there are more aggressive way of management that on this movement could have made a $40,000 day and also on the momentum. But it's just impossible to trade, explain, watch the camera. Like it's not doable. But I hope that they understood my model and they understood how it is that I work every day.
Definitely. And the one interesting thing, actually, just to frame as well, before coming here today, when Fabio, we were planning to just do a normal podcast, and Fabio mentioned, why don't we do this? Why don't we trade this session live? I know, and we love it as well. But he did say, like, look, at the end of the day, I'll trade live capital, I'll trade my personal account, and I will win or lose. Like, we'll just do it. You know, even if I lose on the day, we'll still put it out. If I win on the day, we'll put it out. And I was happy as well, even though we, for the recording, still continued to trade and we took some losses there. I'm happy that we kept that in there. I'm happy that we did that. And that's why I asked you that question, like, how do you feel after taking those losses? Because in my head, I'm like, oh no, we've taken losses. We need to win. But that's me.
Oh,
right?
No, it's not like in my head. I came here saying to Andrea, I hope that we will have a drawdown session. Why? Because you can teach 10 times more stuff if you have a rough session. This is the reason on my channel is coming the worst session of the month, okay? If everything goes good, you don't have to explain, but getting a reason why we stop executing trades when this move happened, okay? Yeah. And seeing that when this move happened, exactly was the top of the day, is letting them understand that you know when it's the moment to stop, okay? Yeah. You are not, like, we are still in profit 15,000. If we risk on this way down after the break, the short from here that I was sure was coming here, okay? On this one, I will zoom. From this movement, aggressive sellers, stop, we could make this movement, risk 5,000 of the 15,000, close at 30, 40,000. But still, I will do something for ego. I will not do something because it's my model.
Yes.
So what I show you is the raw reality of trading. I took profit and I took stop loss. This is the real Fabio. This is the real trading. There is no sugar coating. There is no, let's do 5 sessions and load the best one.
Yeah.
No. We don't do this stuff. And I think anyway, we have a London session of yesterday that was amazing, that we will share with Chart Fanatic, and was something like this, but done in London without needing to explain, because I can comment later. So managing super fast.
Yeah.
And I made like 10,000 risking 1,500.
Incredible.
So it was really an amazing one.
Absolutely incredible. Do you know, in terms of the reality now, do you ever have times where you break your rules or go on till or revenge trade or go outside of your system?
It's really difficult because I know the price of breaking the rules. Like in my setup in my trading station at home, there is one quote that is, either you respect the rules, either you pay the price. And I have a screenshot of the statistical model on Python of how much I lose when I break the rules. Okay? So it's always there with me. And when you see me, we are live, we can risk 15,000, close the day, 100,000, 6 figures in one day, everything. No. Because I know that if today I give back this 15,000, tomorrow, if I lose 10,000 in session, I will be in loss. I will not have the amazing week. Like in the week, we are 60,000 in profit in 3 days. We still have 2 days to go. It's qualified to be a 6 figures week. Why I need to break the rules for ego to show? It's not worth it. At home, I don't do it. There is only one time that I did, was last year, because I had a really difficult situation at home. I received a really bad news and I was not with mental clarity to manage. I took full responsibility for what I did. I get back on track and in 1 week I recover everything. But this loss is screenshot and it's on my desk to remind me what happens when I go far from the rules. Because if you have an edge but you don't respect it, what's the reason of doing all this work to build? Because building an edge is the start. It's not trading, guys. Building an edge or building the experience to have an edge is the real work.
Yes.
So why not respecting rules if you have this? Then you can also put some rule to yourself. Okay. So for example, what we want to put in the platform is to not be able to trade when you get a trailing drawdown for the day. Like if you're profitable 40,000, you get -5 or 10, the platform block you. You need to call the support and say, unlock my account because I want to trade. This is something that is a mechanical stop to the bullshit that you can do, okay? But when you are professional, you don't need stuff like this. You just need to have a conversation with yourself and say, look, for ego, I'm burning a $60,000 profit week for what? To be able to be right on the movement. Who cares? Like people on YouTube, I understood something that is really funny. Like one guy texted me and says, if you really want to give back to the community, you will sell a course. Say, look, if you sell a course, you are a course seller. Yeah. If you only trade, you only trade. You don't care about the community. What a person need to do? Like, I'm giving everything for free, study. You don't need to pay anything. So I understood that you will never be able to make everyone happy.
Of course,
in life,
yeah.
Okay? You will always have haters. You will always have. So the only thing you can do is stick to your plan. If they like the plan, they see the reality of what trading is. Of course, there will be in the but I trade stop run liquidation 1 to 100. You are not able to trade. Take the critics and go on, but don't trade for eco because it's what is burning your account, or don't trade to demonstrate someone else that you are worth it, because this is what really destroy. Oh, they are also breaking the law. Huh? They are.
This is
What I like here is that the order flow is keeping you out of the setup. Like a pre-action trader maybe would have put the limit.
Yep.
And be inside. Here you see.
Higher, low. We're trying to end.
Super aggressive, buyers absorbed. No order flow trader will consider this. You can consider the short to the value area low, and also this one would have been an amazing trade. Okay? So it's possible if we trade all the session with capital to close 50, 60, 70. Just not worth it, because the risk is that here you get another consolidation like this, and you are done.
So even when you set your life up to operate and be efficient, right? You make those sacrifices. Let's say there's a day where you've had you're ill, right? Or you've had a bad night's sleep, or maybe something's happened.
I don't trade. It's not a problem.
Yeah.
Like I just walk away. I don't trade because also on this I have metrics. Like when you trade and you are not in a sharp, remember that my edge is discretional. Okay. So if you are not sharp, you are tired, you didn't sleep good at night, you are putting your capital at risk.
Yeah.
Like the lack of focus can burn $20,000, $30,000. Like when you work with a big account, you are paying big money for errors.
Yeah.
So just it's not. I walk away. Look, it's the law of large number is giving me an edge over 100. Like this week was 120 execution. Okay, over the year I make 5,000 execution.
Wow.
If I lose 3 or 4 trades, nothing has changed. The performance will be there. Maybe I'm lucky and I lose the bad day.
Yeah.
Maybe so it's just you have to consider that time allocation wise, if you are sick, it's always better to not be at the market. Always better to not be at the market, because the edge, it's you.
Yeah.
If you were a quant, you make your system run. So it's not a problem.
And what do you do then actually for downtime? You know, a lot of people, they'll do the drinking, they'll do the partying, they'll do, things that go until the late night.
I love to create stuff. Like, for example, recently I'm spending 30 minutes every evening researching information and data and aggregating them with alternative data sources to understand if I can have an edge, informational edge. Okay, creating this. I know I'm a nerd on this, but I love to do it. Like I really love to. I really enjoy. If they say, look, today you cannot earn money with this. Okay, you only will live out of business and other stuff. I will still be here every day because I like to. For me, it's like chess. People play chess not to be paid, but because it's stimulating their brain.
Yeah.
For me, financial markets is the big chessboard on the planet. You don't have one opponent, you have the world against you, but it's so fun and stimulating for me. And of course, in my free time, I like to go with other traders and friends that they are stressed to spa, to banya, Russian banya, and stuff like this. But I always have a way to keep myself occupied, and I'm not a party guy. Like I don't like to to go to do shopping, to go to do partying. It's not for me. I've never done this before I had money, and I've never done this now that I have money. It's just not fun for me, okay? So
I don't know.
that's what I do. I prefer to spend some time with friends and something chill in the free time. But my free time is really low, to be honest. Places. There is not a lot of free time. But also when people see that the perception that they have of financially free is really different from the truth, because be financially independent and rich without working, like, it's really hard if you start from zero. Like, if your father is not leaving you real estate worth 50 million or 100 million, it's really difficult. You always need, also if you delegate your business, a little bit of interaction, daily calls, weekly check, it's necessary to run the business. So getting a different perspective of what trading is, a professional one, and how much sacrifice you need to make this really your profession, I think is something that the industry really needs at the moment. Because we saw, I don't like to make names, and I will stay on my own here because I already received enough threatening, but a lot of people open white label accounts, they forge track records, and they make money with everything except from trading. Okay, they make money with the surrounding of trading, but not from the market. Okay, the real skill is able to making money by understanding and predicting what the market will do next and adapting, and finding a real trader that is also willing to do this publicly or willing to share with you in real time is something that I've never found when I was trying to learn the profession. Okay, if you want to study, for example, medicine, you go to a real doctor and you have a university. But if you want to be a real trader, out there you find a lot of fake gurus. So it's you also don't have you don't know which expectation to set. If people continue to sell, get rich with $1,000, people will believe this is possible. So the problem is not the expectation of the people, but it's also the communication of the industry.
That's very true. And in terms of your personal journey, you mentioned earlier having a mentor. Like, what did that look like for you in terms of trading education? Did you do a lot of self-teaching? Was there mentors that helped you? Like, what did that look like for you? And how did you pick your mentors?
I took a mentor in the moment that I was already making a lot of money, and I wanted to scale with Edge with one person that was managing a family office of a lot of money. I cannot say the amount, but it was okay. So I took a mentor because I wanted to be able to diversify from the model that I have and get models that run without me. So I took a mentor on different market on options, but on order flow, I never had a mentor, because what I did is spending weeks watching price and understanding in my brain what I can expect after I see every move. Okay, it's pattern recognition. The difference is just that people do this with candles. I do this with deeper information inside candles. But I think if you put someone and you say, look, watch this for 1 month. Don't execute. Sooner or later, they will start to see that certain pattern of order flow have an edge. Now you have a model. Start to execute on a demo, plot this in a statistical distribution. Now you are a trader. Okay.
You can't avoid the work, right? Most people try.
That's the reason I don't sell a course. Because I can give you the best knowledge I want. I can give you the best. But if you don't put the effort, it's like people signing up for gym, never going, expecting to lose weight by not going. Like, you cannot pay for something and get transfer. We are not in Matrix where you put and you get knowledge. Okay, you need to do the lift. And I need to say that 99% of people, they want something ready. They want the YouTube strategy. 99% we rate with moving average. Okay. And this is the comments that I usually get on my channel. And they say, why you need to overcomplicate this? Because financial markets are fucking complicated. Because it's multiple information they are exchanging in dark pool. You have order flow. You have options. If you want to make this a 50, 200 dead cross moving average model, good luck on the result. Good luck.
I love it. We're coming to the end now. It's been such an incredible episode, a very unique episode of Words of Wisdom for sure. Just to finish off, I'd love for you to talk to the audience, like, just give them your best advice in terms of scaling their journey as a trader? No matter where they're at, whether they're a beginner, maybe you can give different advices based on where they're at, but beginner to intermediate to advanced, like what would your message to the trading audience and community out there be?
Okay, so to the one that are starting and to the one that are scaling, don't put capital at risk before you are able to measure your edge. Measure your edge. Either it is algorithmical, either it is with a trading journal. Get your statistics ready. Be able to understand your drawdown, your profit factor, because these metrics are the one that you will want to check when you are in drawdown. And if you don't have something that is backing what you are doing, you will start to say, I'm just gambling. Trading can get like gambling if you don't have an edge. So start in a way that is protecting yourself before risking real money. Do all the work necessary before that you put real capital at risk. So in the moment that you put real capital at risk, you will not lose money for ego, but you will lose money only for the retracement of the market for your model, but you will be profitable in long term. The difficult part, guys, is not trading. The difficult part is the patience and the work that you need to put to become a profitable trader with edge building. From this moment, it's all on the upside, and check your expectation. You cannot get rich with a small account. You cannot try to flip your account. Real trading is based on risk management. Don't check the return, check the drawdown, and base the model that you use based on the drawdown, not on the return. Because if you are not doing this, probably you will never check the return. You will only check the drawdown, and you will have a huge risk of ruin.
I love that. Fabio, thank you again for being the one to suggest this, first of all, but doing this again for us and trading live today with your own personal capital. You don't have to do this. You don't get any benefit other than the benefit you're giving to the community and the feedback, no doubt. And, on behalf of everyone who's watched this episode, all of your episodes and the last Chart Fanatics episode, we want to say a massive thank you for showcasing this and opening a new door to a level of transparency that wasn't in the industry before, I would say, and I think most would agree. Everyone at home, drop a comment with your biggest takeaway from this unique episode. It's absolutely crazy. It blows my mind every single time. I actually have to do like deep thinking afterwards of like what just happened. But links for Fabio will be in the description below. Check out obviously Deep Charts as well, the Autofo platform that, as Fabio said, has put in so much time on their end, but also gotten feedback from some of the best traders in the world. So it's going to be an absolutely world-class platform as well. And that's just me saying that. So sorry if it gets a bit awkward with me doing that in front of you. But yeah, hit subscribe, hit like. Other episodes are on screen. And until next time, take care.